Wednesday, January 9th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about the triumph of gold. And some of you may ask, what do you mean? Well, I've asked myself as well, because it's a title of this book by Dr. Franz Pick, The Triumph of Gold. I've read it quite a few times. I highly recommend it. It's not an easy book to find. So I'll go over through that. I also want to go over fiat money inflation in France, how it came, what it brought, and how it ended by Andrew Dixon White. It's a classic. They're all very short books, and it won't take too long for you to read them, and very interesting. Before that, of course, I'll have a look at the market, see what they're doing this morning. It's around just before 7:45 a.m. London time. So let's get straight to it. Spot gold still going nowhere. I think we're consolidating right now in gold and silver before moving higher. Who knows? But that's the feeling I get. We're at 1282.60, down $2.50. Range has been 1281 to 1287. Silver 1561, down 3 cents. Range has been 1557 to 1570. The Dow is up marginally, 40 points or so at 23,823, up 0.2%. Technically, long term, I still think we're in correction and in the down market. We could still maybe go higher a little more. I think the 50% retracement of the recent move down from October 3rd to the recent low before Christmas. We've gone through the 38.2% retracement of that. We could go a little higher towards the 50%, but not much more in my opinion. S&P up 3, 2576. NASDAQ 100 futures up 5 points, 0.07%. So the markets are a little higher, but not much. Currencies are stronger this morning. The European currencies, the pound is up 0.2% against the dollar, 127.40. Euro is up just about 0.25% at 114.68. Dollar is up a little bit against the yen, 0.14%, 108.89. The dollar is down 1/3% against the yuan, 683.50. Oil, oil is back up above $50. The WTI is at $50.60, up 1.3%. The 10-year yield this morning is at 272. So we have rebounded a little bit from yesterday. I think we were around 268 or thereabouts. So the triumph of gold. Let's get to the book. Well, Dr. Franz Pick, it's a classic in my opinion. This book was written in 1986. Franz Pick used to write used to be called the Black Market Book of Currencies. I think he was born late 1890s. He served in the war for the Austrian Empire. He eventually moved out of Austria, went to Paris, and then ended up in the US. And he was a well-respected currency analyst, and even central bankers used to consult him. And he wrote this book, The Triumph of Gold. And I've read it a few times, and I told myself, I've told myself that he's been wrong because gold hasn't triumphed. We still have the paper dollar. But actually, I'm wrong about that because gold is continuing to triumph, I think. He's got here a gravestone in the US dollar. And I think he's going to be right. It will take a while, or it could be very soon. He wrote this book 33 years ago and it still hasn't happened. But just because it's taking long doesn't mean to say it's not right. And one thing that I always try to think about is the fact that I remember quite well, probably 2002, 2003, or thereabouts, maybe 2004 even, buying one of these gold sovereigns, right? Which is about just under a quarter of an ounce of gold for 5 of these 5 10-pound notes, as you can see here. And you know, Bank of England notes, 5 of these. I remember buying these, one of these. So nowadays you look at the different dealers, you roughly, if you're just going to buy one, you're going to need about 25 of these. Of course, if you buy maybe more, you're going to need maybe 24 for one. So you tell me, is gold triumphing against this paper money? Of course it is. And you can do the same experiment for the dollar or the Federal Reserve note. And the only reason I'm using pounds is that that's where I am, and I don't really hold Federal Reserve notes. I try to avoid them. I try to avoid these as well, but we need to use them here in the UK. Any spare ones that I can put away, I'll convert them into this. But it's getting harder and harder. Gold is triumphing then. Eventually confidence will be lost in all of these. And that's where I want to come to as well, this book, after I have a look at this one a little bit. So a lot of people say, well, for example, Peter Schiff, or even me, they could say, you're a broken record. You keep saying gold is going to do well. Well, we're not even trying to predict things. We're just like giving you the history and the facts that bad behavior usually can't go on forever, and it's usually punished. So what's the bad behavior been? Well, the bad behavior has been since 1971, or 48 years now. It's almost 50 years. The world's monetary system has been badly managed. There's been bad behavior by the monetary authorities, by politicians, by central bankers, and it will end in tears. It's just natural. And this is what Dr. Henry Jarecki talks about. He introduces the book in this book, and I'll read it from the introduction. True enough, he predicted, that means Franz Pick, right? Or said he did the 1926 devaluation of the French franc, the 1931 devaluation of the British pound, and the meteoric rise in gold that emerged in the late 60s. But those predictions were not, when one knew him, predictions at all. They were rather the words of Hosea declaring that the children of Sodom and Gomorrah were behaving badly and would thus come to no good. They were not, any more than Hosea's words were, practical guideposts. Not at all. He knew no more about when gold or currencies would go up or down than anyone else can in this random world. So that's what I'm trying to say. Yeah, we can see that gold's going up, look at the technicals, but it's almost impossible to know exactly what's going to happen. But you can know that because of the bad behavior, in the long term, it's bound to do what it does, which is the fiat currencies go down. And that's why I gave you that example of the pound notes here, that you need more of these to get one of these. And it is a bit confusing, because some people might think, wow, yeah, that's good, you need more of these. No, that's bad. That means that that's got a lot, less power to buy one of these. So anyway, so what else does it say here? He and I often argue about its randomness. I saying all of life was unpredictable. He's saying it was obvious destiny. To defeat my skepticism, he repeatedly cited his two somewhat diverse educational inputs. His hometown rabbi, whose Talmudic teachings proved for Pick that every currency was doomed to be unstable. And second, the 19th century Prussian economist Georg Friedrich Knapp, who believed that money was an instrument of state order. I would say currency. That its value reflected the public's attitude toward the state, and that given men's failings, and thus the state, the only road a currency can go is down. It's common sense, and that's why it's important to know about history. There's an old saying that those who ignore history, repeat the errors from the past, something like that. Don't know exactly, but Mr. Pick, Dr. Pick, when he wrote this book in 1986, gold was trading between $300 and $400 an ounce. So now it's almost $1,300. It's been up to $2,000. So I would say he's been right. It's just taking a long time for the Federal Reserve note for people to lose complete confidence in it, and for the world to go back to a stable standard of value that has been around for thousands of years, which is gold and silver to some extent as well, of course. And why is it taking so long? Well, this is another good book that explains that, I think, in my opinion. Fiat Money Inflation in France, How It Came, What It Brought, and How It Ended, by Andrew Dixon White. You can find a free PDF of that. I'll put it down in the description. Triumph of Gold is harder to find. I couldn't find a free PDF. You might have to look on eBay or Amazon. Not sure. So, why is this book interesting, and what's it got to do with the Triumph of Gold? Well, I think it talks about France during the Revolutionary period. The fall of Bastille was 1789, I think, and then in 1791, they got rid of the royal family, and they had a period of about 5 years where France was in chaos, so to speak. It was bankrupt, and they decided to issue these assignats, which is basically paper money, and they even backed it, though. They backed it by the land and the property they confiscated from the aristocracy, from the nobles, and from the Catholic Church. And you might have thought that that would have worked, but it didn't, because in the beginning it helped, and then they had to print more and more assignats, and then eventually it lost all its value, its confidence. People, there's the reign of terror, there was oppression, you had to use these paper assignats. It sounds familiar. And the thing about this, though, that it was only France doing that at the time. The rest of the world was on a normal monetary system, gold, silver, and that's probably why it didn't last that long. What I'm trying to say is that now, since 1971, we've been forced to have this system by the world power, which is, the United States, and I think that's why it's lasted longer than it normally does. But it will come to its end. There's no doubt about it. So I just want to read here a little bit of the kind of summary that Mr. Andrew Dixon White gives at the end of the book. This book was written, I think, around 1912. So he goes on to say on page 63, and first, in the economic department, from the early reluctant and careful issues of paper, we saw as an immediate result improvement in activity in business. Yes, it was reluctant. It's like doing QE. That, like the ECB, for example, they only started doing it quite a few years after the Fed did. They were reluctant, right? Then arose the clamor for more paper money. Well, that's now the Powell put. The speculators, they gotta have the money, or else things are gonna collapse, right? At first, new issues were made with great difficulty, but the dike once broken, the current of irredeemable currency poured through, and the breach thus enlarging. This currency was soon swollen beyond control. Yeah, trillions, quadrillions of derivatives, 21 trillion missing. Sounds familiar, doesn't it? It was urged on by speculators. Well, there we go. For a rise in values. The demagogues who persuaded the mob that a nation, by its simple fiat, could stamp real value to any amount upon valueless objects. As a natural consequence, a great debtor class grew rapidly. Wow, that's familiar as well. And this class gave its influence to depreciate more and more the currency in which its debts were to be paid. The government now began and continued by spasms to grind out still more paper. Commerce was at first stimulated by the difference in exchange, but this cause soon ceased to operate, and commerce, having been stimulated, unhealthfully wasted away. Manufactures at first receive a great impulse, but ere long, this overproduction of and overstimulus proved as fatal to them as to commerce. From time to time, there was a revival of hope, like the green shoots, the synchronous global recovery, right? Caused by an apparent revival of business. But this revival of business was at last seen to be caused more and more by the desire of far-seeing and cunning men of affairs to exchange paper money for objects of permanent value. As to the people at large, the classes living on fixed incomes and small salaries felt the pressure first, as soon as the purchasing power of their fixed incomes was reduced. Soon the great class living on wages felt it even more sadly. Prices of the necessities of life increased. Merchants were obliged to increase them, not only to cover depreciation of merchandise, but also to cover their risk of loss from fluctuations. So it's amazing. I mean, it's all happening again. I've noticed here in England, in the UK, in the beginning of the year, prices of some things have increased. They've increased the price of transport, like the railroads, the trains that you get to work, by about 3%. You can see some of the newspapers prices have increased. I've just noticed in the shop. Don't buy them, but they have. The symptom of the rising cost of living is what's happening in France with the yellow vests and spreading all over the place. And there are retired people, pensioners, protesting with these people. So it just goes to show. So there you go, the triumph of gold, and it will triumph. I know it's frustrating, the price fluctuations in the fiat. The powers that be have been able to brainwash and the people into believing that gold is a risky commodity. They've made it, they control the price with the futures market on COMEX. And it's funny that that future contract on COMEX was started kicked off on December 31st, 1974, which is a day before gold was legalized again for the first time since 1933 in the US, 1st of January 1975, right? So we just got to stick to it, in my opinion. That's what I do. And it's up to you to decide if you want to, try to fight this fiat money inflation. Gold will triumph. If you enjoyed this video, give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day, and I'll talk to you later. Take care. Bye.